Hello everyone, welcome to The Upside. I'm Catherine Thomas. Today we're doing something a little different. We're explaining ETFs like you're a 5-year-old. No jargon, no assumptions, just the basics. We have Max and Audrey here, our ETF geeks, to tell us what they are, how they work, and how people actually use them. So Audrey, why don't you walk us through, what is an ETF?
Okay, so an ETF is what we call an exchange-traded fund. Sorry, it stands for exchange-traded fund. But I think a better way to think about an ETF is a fruit platter. Mm-hmm. So I'm going to use a little bit of an analogy here. Pretend you're at the grocery store and you are heading to a party and you need to bring fruit. You have no idea what kind of fruit to bring. There's so many different options out in the produce aisle. Mm-hmm. So you have two options. The first one, you can go into the produce aisle and you can go individually buy an apple, an orange, a grapefruit, pineapple, grape, kiwis, strawberries, bananas, and so on. Mm-hmm. I mean, that's a lot of work. You have to go to each different fruit, look at it and see which one's the best one. Is this bruised? Is this a good choice? And you really have to go and make a ton of different decisions when it comes to picking the fruit. Now, an alternative option is going to the pre-made section. Let's pretend that that's a stock exchange. Mm-hmm. And you can go actually get fruit platters where the fruit platter is already packaged for you. It has a variety of different fruits. And there may be, multiple different types of fruit platters. So one fruit platter could be a berry blast fruit platter. One could be a tropical fruit platter. Another could be a stone fruit platter. There's a fruit platter for you, no matter what kind of fruit that you're looking for. So that fruit platter would be a perfect example of an ETF. An ETF is like a basket of securities or a platter of different types of stocks, bonds, or other types of investments. Mm-hmm. And it's a really great tool because you don't actually have to go and buy and pick out all the different types of investments. You don't have to go out and pick out all the different types of fruits, slice it, cut it into the perfect proportions. You can just go to the exchange or you can just go to that, pre-made aisle mm-hmm. and just pick up a platter. So that would be a great example of what an ETF is.
I really like the example you used there of fruit platter. It sounds like ETFs are a way to get a variety of products all packaged together, and they can also be tailored based on what you're looking for.
Exactly.
So Max, you want to walk us through how do ETFs work then?
Yeah, for sure. So ETFs trade on an exchange. That's what the E is, exchange traded fund. And an exchange is anywhere that you go to buy and sell securities. So the one most people are going to know in Canada is the Toronto Stock Exchange. That's where most of the volume happens. People buy their stocks on the TSX. Mm-hmm. And ETFs trade just like stocks on these exchanges. And so they're really easy to buy because you just go and place a trade to buy or sell an ETF just like you would any other stock. Mm-hmm. So from the process of an investor, it's exactly like buying a stock from an exchange.
Interesting. So now that we know that they trade on exchanges, Audrey, can you kind of walk us through how can you use an ETF?
Oh man, you could use it in so many different ways, and I think that's what makes it such a good tool, right? For example, if you're just a new investor, you're just getting started out in investing, you could use it as what we would like to refer to as core holdings. Mm-hmm. Or it's exactly what it sounds like. Make that your core part of your investment. And there's really a lot of different types of ETFs out there. Even in Canadian marketplace alone, there's thousands of different ETFs. Mm-hmm. So there's likely a different ETF that is suitable for whatever that your kind of exposure or access you're trying to get to. So you could use it for a core holding. You could use it to build around your portfolio. So what we're seeing is investors are being a lot more intentional about how they use ETFs. Mm-hmm. We're seeing investors kind of increasingly treating ETFs like a toolkit or like a building block. Mm-hmm. So you could use, you could have a core holding, and then you can use other ETFs to get exposure to other areas of the market. Let's say you really believe in a certain theme. I'm going to pick tech and innovation because that has been one that's really been, something that has got a lot of investor attention recently. You have your core holdings, and you want more tech and innovation. there's likely an ETF that kind of fits to that theme and is built around that theme, and you can, use it to build around your core holding there. You can use an ETF to just as a single ticket solution. I think that's something that, perhaps we're talking about later on the series. If you just don't know where to start, you don't want to be the person that has to pick hundreds of different individual stocks and trade hundreds of different individual stocks and incur a lot of trading costs. You can, there's likely an all-in-one type ETF out there that it's a single ticket solution, and you're invested, globally, and you're diversified, or you don't have all your eggs in one basket in just one trade. So that's another way we've seen people, seeing investors use ETFs. Another way, for those that kind of want to be able to have the flexibility of trading within the day. So when markets are open, people that kind of want to be able to get in and out of an ETF within a day, as long as it's within the window when markets are open and markets are closed. So that's another way.
I'm going to say, just for our investors out there, can you walk us, just kind of touch on, so when do markets open and close, just so that they know when they can change, or when they can trade the ETF throughout the day?
Generally speaking, so I'm going to use the Toronto Stock Exchange as an example, 9:30 a.m. Eastern Time to 4 p.m. Eastern Time, generally speaking.
Good to know. So it sounds like for ETFs, you can either use it as, the main dish or the little side dishes on the side.
Exactly.
Or holding.
I like that.
Or sleeves for exposure. I know that we're talking a lot about food lately.
Yeah.
Let's dive more into the different types of ETFs. I know that you kind of touched on, Audrey, the fact that you can, target exposure.
Yeah.
But Max, can you kind of walk us through what are the different types of ETFs that we can use to then target that exposure or use as a core holding?
Yeah, and Catherine, this is exactly why ETFs have become so popular. I like to say if you can dream it, there's probably an ETF for it out there.
Yeah.
There's some exceptions to that, but there are actually more ETFs listed in Canada than there are individual stocks, which is pretty crazy. So there's a lot of choice for investors out there across all asset classes. So equity, fixed income, commodities, alternatives, and multi-asset solutions like Audrey was talking about before.
Yeah.
There's ETFs for all of these. And so it's really up to you how much you want to customize your portfolio and choose from these different asset classes and styles of ETFs. Or if you want to keep it simple, you can go with a multi-asset solution that does a lot of the heavy lifting for you. And across the different asset classes, there are also a lot of different styles. So when ETFs first came to the market, a lot of the first ETF launches were passive ETFs. So very low cost ETFs tracking broad market indices like the S&P 500 or the S&P TSX Composite. Since then, though, there's been a lot of innovation in the ETF space. And now we're seeing a lot of active ETFs, and also there's a third category that not many people know about called smart beta ETFs that are run systematically that are being launched. So actually most of ETF launches today in the Canadian market are active ETFs. And so active ETFs, unlike passive ETFs, the portfolio is designed by a portfolio manager. So these people are pros. It's their career to go and pick stocks or bonds or whatever in order to build this portfolio. And they're constantly monitoring it and adjusting the portfolio based on their views in accordance with their mandate. Smart beta, that third category, is somewhere between passive and active. I like to call it active in design but passive in execution. So some brain behind the scenes designs something like an index or some sort of rules-based approach to investing, and then the only job of that smart beta ETF is to track this proprietary index. And so an example of that is at Fidelity, we have the Fidelity US Value ETF, and so we have the Fidelity Canada US Value Index, and it's a completely rules-based index, so it uses screening criteria and portfolio construction methodology to design the portfolio. And that portfolio just tracks that index. So it was actively designed, but after it's been designed, the execution all happens passively. And there's different price points across all of these different styles of ETFs. So passive tends to be cheaper, active tends to be the most expensive because portfolio manager is doing the heavy lifting, and then smart beta tends to be somewhere in the middle.
Interesting. So it sounds like there's active, passive, smart beta. I'm sure we're going to touch more on that later on in the series, but you mentioned something very important, that there's actually more ETFs out there than stocks in the universe. So why is it that ETFs have become so popular with investors?
I think it's just the flexibility that they provide you. And some of the points that Audrey was talking about before, they have these great benefits like intraday liquidity, which is the finance pro way of saying they trade throughout the day. And you can really just do so much with them. I think compared to other vehicles that have been used historically, such as mutual funds, ETFs tend to also be lower cost as well, although that does depend on the mandate. There are some ETFs that have higher fees as well. But just the fact that they're so flexible and there's so much you can do with them, Canadian investors we're seeing are increasingly interested in having more customizability with their portfolios. And so the Canadian asset management landscape, I'm always impressed with the amount of innovation that comes out of it. There are new products that are joining the market from month to month that are providing these new choices to investors.
So it sounds like we've had quite the introduction to ETFs from you both. We learned, how they work, the different types. Is there anything else you think would be, important for investors to know when they start with ETFs in introduction?
You know what? I think there's just so many great options out there, and I think maybe the last little piece I'll leave with us today would be the fact if you don't know where to start, a good place to start could be an all-in-one ETF. And I know I touched on it earlier on. I love talking about these type of like the all-in-one products because I truly think they're such a fantastic tool. Mm-hmm. They're easy to use, one-ticket solution, and oftentimes provided at a lower cost. And everything is taken for you. You get global exposure. You get it's diversified from a style standpoint, diversified from a factor standpoint, diversified from a strategy standpoint, and you get it with one trade, and you don't even have to worry about rebalancing because there's a professional taking care of it for you. So I think if you don't know where to start, an all-in-one ETF can be a great option.
Well, I as well, I'm a big fan of the all-in-one ETFs, and hopefully we'll get to learn more about that later on in the series as well. But thank you both for being on the show today and chatting with us and giving us kind of the rundown of ETFs for a 5-year-old. Thank you for watching. At Fidelity Canada, we're releasing new content daily, so please look up the Upside or Fidelity Connect's podcasts for more. And don't miss the next episode in our ETF mini-series with Cameron Bruce and Megan Chandler. I hope you enjoyed the Upside today. I'm your host, Catherine Thomas.
Thanks for listening to, or watching, Fidelity Canada's The Upside podcast. Subscribe on your podcast platform of choice so you don't miss an episode. And if you like what you're hearing, please leave a review or a 5-star rating. Fidelity mutual funds and ETFs are available by working with a financial advisor or through an online brokerage account. Visit fidelity.ca/howtobuy for more information. While on fidelity.ca, you can also find more information on future live webcasts. And don't forget to follow Fidelity Canada on LinkedIn, YouTube, Instagram, or X. We'll wrap things up today with a quick disclaimer. The views and opinions expressed on this podcast are those of the participants and do not necessarily reflect those of Fidelity Investments Canada ULC or its affiliates. This podcast is for informational purposes only and should not be construed as investment, tax, or legal advice. It is not an offer to sell or buy or an endorsement, recommendation, or sponsorship of any entity or securities cited. Read a fund's prospectus before investing. Funds are not guaranteed. Their values change frequently and past performance may not be repeated. Fees, expenses, and commissions are all associated with fund investments. Thanks for tuning in. We'll see you next time.